All right, welcome back, everybody. No surprise here. This is gonna be the May 2021 recap. Um, pulled out 159,000, which I couldn't really be happier about. This month was really, really cool. It's gonna be different a little bit in this video. I'm gonna kind of go over less plays, but more quality plays, because I think that's the general theme of this month. Um, it's hard to say how the rest of the year will go, but in April, making 65,000, which was awesome. I talked about that in the beginning of last month's video, but it was also my lowest month of the year. And so I thought going forward, how will the next few months go? And so for May to be, almost three times bigger, taking about 2.5 times bigger exactly, and taking about the same amount of trades, is pretty awesome. We'll see how the rest of the year goes, the rest of the month goes, but making this kind of money and kind of having the account size to where I can kind of average this kind of amount, uh, I mean, that's incredible. That's easily putting me in the top 0.001% of income earners around the world, which is more than enough, which is incredible to think about. Now, granted, again, this is trading. Like, of course, I could easily have a month that's lower than April. I can easily have a month that's not even five figures. Um, but just really, really happy with how even after this insane market that we saw in January and February, and even a little bit in March, that even after that insanity, we're still getting really good opportunities. And obviously, from trading as long as I have, I still have the skill set, and then with the extra capital that I've earned, I'm coming out with these kind of a months, and they're not too foreign to me anymore. So that's really, really awesome to see. I'm really, really happy with that growth. Um, so I tweeted about, where's my mouse? Here's my mouse. I tweeted about my particular month here on Twitter, and I said, again, same amount of trades as I took in April, but almost 2.5 times more money in profits. And I can pretty much contribute that to just three main huge plays of the month, which is ETCG, HTZGQ, AMC, which turned out to be 78% of my month. Just these three tickers. And so I think to for me to be really, really efficient, I think it's going to be really, really valuable to go over these particular plays and kind of how they ended up being so much. Because all these other days, let me get this out of here. Uh, all these other days in between those main plays, like, yeah, I have some decent solid days here. Not to knock any of them, but they just weren't. Yes, they improve my account size. Yes, they make me money, but the three tickers that I want to go over in this video are like the needle movers, right? They're the ones that actually really move my account forward, like significantly more than my average trade. Now, granted, most of your trades are going to be average trades. That's why they're average. But I think the next biggest step after becoming consistently profitable, like first you're unprofitable when you first start, then you kind of find consistency, you become consistently profitable. But I think the next step beyond that is really knowing when to push it. Really know when in a safe way. Obviously, not you're not risking or any blow up or anything, but you're learning to push your limits to a point where you can really excel when you're given an amazing opportunity. And that's what I did for all three of these trades. That's why they ended up so much of my month. That's why by the first week of May, I was already up more than my entire month of April. So let's just jump right into these three trades and really go into detail with all of these. So first one, which was the first week of May, was ETCG. So for those who don't know what ETCG is, it is a grayscale Ethereum trust. So technically, it is not like an ETF. It's not really a traditional stock either, but it is a fund that owns Ethereum Classic, which is a cryptocurrency, and they own a certain amount and then they equate it to the same value as if it was a stock. So kind of like an ETF, but not. It's on the OTC market, so it's not on like a listed exchange as like an ETF. But again, they own Ethereum Classic, and they allow that value to be kind of put into shares, and we can trade ETCG as shares of a stock freely on the OTC market. So um, one of the ways I actually watch Ethereum Classic trade is through BitcoinWisdom.io. And so this is Ethereum Classic's chart. As you can see, we really start going insane and parabolic, similar to the daily chart here, right? It doesn't follow it exactly, but it should, right? The goal is that it follows Ethereum Classic, which is why it kind of had these huge first 4 green days. Um, and so, like anything, this is just a supernova, right? This is overdone, bought asset, whether it's crypto, whether it's stocks. It's fitting the supernova psychological framework that I know and love, and that Tim Sykes has taught many of his students, and that many other traders, even that aren't taught by Tim, know how this works. It's a very profitable strategy if you know how to play it, and it's certainly my favorite. So, going into this run up, um, I knew I had to be careful because that the dynamic that this particular play has versus others is that it's following a crypto. Cryptos trade 24/7, right? The stock market only trades what, 7.5 hours, 8 hours a day. So there's quite literally like about 16 other hours that ETCG is following, and it can't even trade. So whether Ethereum Classic gaps up huge, gaps down huge, um, if ETCG is likely going to follow it. At least that's how it should. I'll go into this in a little bit, but it kind of changed, and it kind of actually screwed me up a bit. Um, but the point is there's a dynamic that isn't normal with an average stock, right? If I'm going to go trade, I'm not going to go trade Apple. But if I trade Apple, it's only going to be open 8 hours a day. I don't have to worry necessarily about an overnight anything. Of course, there could be news, but there's no other asset that's trading Apple that I can't control, right? It's Apple is Apple. Problem is, if I'm trading ETCG, I'm trading Ethereum Classic, and Ethereum Classic trades 3 times more or 2 times more longer than ETCG does, solely because one's a crypto, one's a representation of a crypto on the stock exchange. So again, I'm using this website to watch Ethereum Classic trade. And so going into this day here on the 6th of May, let me see if I should be able to get intraday here. I was watching, so on the 6th of May, as we're really kind of full sending it here on this day, really getting overextended, that is clearly this day when we go from pretty much 100 to 175 with Ethereum Classic. Now, during this action, we kind of had a huge blow off move. I mean, we literally went from like 110, 120 straight to 160, 170 in a matter of minutes. And so that was a huge sign of like a blow off move. That's why you see here, we had this huge little parabolic here. And so if we go into our trades, or my trades here, you actually see me starting to short into strength here. And normally, right, if you see me make a stock new highs, you see me cutting it, but you don't see me here. So like this looks very, very risky, and in some cases it is. I don't do this for literally 99% of the trades I take, but for this sole reason of I knew that the odds were in my favor of Ethereum Classic kind of having a backside move while the stock market was closed was highly likely. Granted, it could have been wrong. Granted, this thing could have gapped up again. If it went over 100 at that point, or 110, I would have cut it for a very big loss. But it was a risk I was willing to take, right? It wasn't me just gambling of like, oh, I'm just going to short here and I'm going to make money. No. I had a thorough plan. I knew it was more risky. So these little arrows here are me taking like, 100 shares max, right? It really was never pushing an extreme amount of size in accordance to, or in relation to my account size and how much my account could handle in terms of a loss. And so you even see here, I actually tried to short here more because this pull was when Ethereum pretty much went from 175 and it pulled back down to like 150 off that huge parabolic move. And then it pulled down again to like 140, 130. So I shorted here this lower high and then covered a lot here. So I already had locked in a few thousand in profit. It bounced, reshorted a small, I think 100 or 200 shares, and I took a few hundred shares overnight. Now, granted, in most cases, there's no reason for me to take them overnight because, again, we're still in this huge kind of, supernova green day move. But because I knew this stock is going to be following this crypto, it was pretty high odds that by the next morning of this market open, Ethereum Classic was going to be lower. Okay, so coming into the open the next day, Ethereum Classic was lower. I believe it was about $10 per coin lower than it really was. It was about, we were already having this red day here. And what was weird about it, though, was that you can see here, we opened up pretty much break even. We didn't gap down. So my thesis, which is what usually happens with crypto-related stocks, they usually should gap down. Like there's one like, GBTC follows Bitcoin, this one definitely gaps down. I mean, right here is a perfect example. It gapped down just the other day because Bitcoin was trading lower overnight. So that's what I expected out of ETCG, but it wasn't. And so it kind of threw me off. I was like, of course we're not gapping up, which is a good sign, but we weren't gapping down. So I was kind of thrown off by that. I said, okay, look, whatever. I still have my position size. At this point, I probably could just risk, 96 to 100, given that even Ethereum Classic isn't higher than 175 of its high. So let's just see how it goes. Come out the open. Let's go to here. I do try to short a little bit more, but this arrow was like 5 shares. So I really did not add any size whatsoever when we went red for the first time. And painfully, I covered it all right here. There was like a little fake turn. And again, because we were following Ethereum Classic on the front side, I had thought we were going to follow it on the back side. So yes, even though we were having a first red day here, we weren't really that low yet, right? We didn't go nearly as low to the point where I thought we would go, this low down to, sub 80 this quickly in a way. And so that first fake out turn kind of really just faked me out. And so I ended up covering it all, watch it panic, another $10 a share. And I'm just like, oh man, like it really was not painful, because I did lock in money. I locked in, a few grand here, or a few more grand here. But to see it follow Ethereum Classic on the way up so much, and then to see it not follow it even nearly as much on the way down, was something I didn't necessarily expect. And of course, I did eventually adapt to it. I did buy this dip here in this broker Cobra and an E-Trade and flipped it. I made a few grand there, reshorted a small bounce for a scalp there. And then once we really bounced here, by this point, I had realized, ETCG was not following Ethereum Classic anymore. Yes, it was following it big picture that it was going to have a red day, but in terms of selling off like the exact same percentage or following it exactly in kind of a shorter time frame, I quickly realized there were probably more people in ETCG trading ETCG for itself than actually understanding that it's following Ethereum Classic, right? Because if you're a buyer and all of a sudden you're down on your position, you get emotional, people in that are like that for ETCG don't even care anymore what Ethereum Classic is doing. They just want out. They're just trading this stock solely and not even going to be looking at the underlying asset that it's following. So it got really divergent, right? They weren't even following each other in any of it at this point, which finally I understood. Unfortunately, I wish I knew that's how it was going to go out up here. But again, it's hindsight. Like it would have been really tough for me to tell. But luckily, I noticed it by the time we had this bounce. I reshorted here, covered into this pull, reshorted again on this new low a day, and made a little bit more here. So pretty much these two shorts, more than doubled my original win from here. Because by this time, this is when I started taking more size. This is when I was convicted of the fact that we're having a first red day. It's not even following Ethereum Classic anymore. And I think by the time it was down at these lows, there was an article or a tweet put out saying that ETCG is now trading at a 20%, or 20 or 30% discount to where it should be of Ethereum Classic, right? So like the amount of Ethereum Classic that ETCG holds, it should have been worth like 60 or 65, but because so many sellers didn't care and they were just selling off, it hit as low as like 50, right, or 55. So hopefully that makes sense to you. And that's when I kind of realized it was going to go that route around here, like I said. But then all in all, I between the longs and the short, I locked in, this huge day on the 7th. So I couldn't be more really happy about it. It's still a massive, massive win. Great win. Again, had I maybe anticipated the fact that it wasn't going to maybe follow Ethereum Classic as closely, given that there's the emotionality of being down, like this kind of panic was going to ensue. Jack called it. Me and Jack are both in, learning our trades in the breakouts and breakdowns room. And he said, he was like, I think it's just going to panic. Like he really called it, and he really did. He sized up here. He unfortunately did cover early like I did. Didn't really reshort this bounce, but he made way more because he was really able to just size up here, kind of anticipating that a panic was going to come, that people didn't care anymore about Ethereum Classic. They just wanted out of ETCG, which was a great call. But again, that's pretty much the review on this particular trade. I didn't really trade it too much. The rest in here, like a couple scalps here and there, but that main first red day was really the key play. Because again, so many green days in a row. Supernova Framework 101, like I mentioned, just really my ideal trade all around. So going into the next big trade of the month was HTZGQ. This is Hertz. Hertz has been bankrupt for about, I would say, a year now, right? COVID kind of really hampered their business and sent them into bankruptcy. This was a huge run when they kind of were going bankrupt, but a lot of people in like Wall Street Bets, I believe, and Robinhood, like really just started buying this stock up for really no reason. And of course, you see what happens next. They just get crushed. They go to the OTC market. They're trading kind of in this small range between $2 and $1 for a few months. And here comes along news, kind of unfolding of them really coming out of bankruptcy. Right? They just didn't go in bankruptcy to like completely stop as a company. They went into bankruptcy just to restructure themselves, kind of reformulate their business, and they're going to come back. Now, what's interesting about this particular bankruptcy plan is that supposedly shareholders are going to get value of their stock, whereas most bankruptcies kind of wipe out shareholders. They're like, shareholders get no value. We're just going to start fresh as a new stock or a new company, kind of, and we're just going to go from there. I believe, again, the court hearing still has to take place in June, I think, but from the plan that's been proposed, some shareholders actually get to keep some value of the stock. So that's why you see this huge spike, huge kind of uptrend. And again, similar to ETCG, right? We have 3 beautiful green days now, or 4 really, from sending it now from 3 to 7. And yes, the bankruptcy news is good. Yes, they probably will come back as a company just as well as when they first were before bankruptcy. But it doesn't take away the fact that there are still sellers who will want to sell when they're down. There's still people who are going to chase it and buy to the top. Just from a psychological standpoint, there's always going to be, no stock is going straight up or straight down. It's a bouncing ball. It's a kind of up and down dynamic. And so when we go up so much, a backside move is likely. Now, granted, this news was good enough to the point where it's actually holding pretty well. If you look at some of these red days previously here, these red days were actually much bigger pullbacks in terms of percentage moves. Whereas if they had played out the same percentage on this pullback, I mean, this thing, HCC probably should have hit 5 or even 450 in terms of, like, again, percentage wise. But because the news is good, it actually held pretty well. But so going into the intraday chart, I remember making it a point in my April video that a goal for May was to really kind of protect myself from bigger losses. Like really, really think about my risk and how aggressive I wanted to be on certain plays. And so this particular play, I don't regret it, how aggressive I was. I just think I got too aggressive, not in terms of my risk I was willing to take, but attempts I was willing to take, right? So let's just get into the trade. So let's get rid of ETCG. So HTZGQ, right out the open, we're testing red green. And so I am, knowing the size I want to take on this stock, I know I kind of have to short a little bit before then. If I waited for it to go to red green, I probably would have missed it by a few cents or had to chase a few cents because, again, this is the OTC market. The fills are not as efficient. So I did short. Now, right when I filled, I immediately knew I was wrong. Immediately. So I tried to cover as quickly as I could. I covered most, but I had a little bit left. And so, okay, with the little bit left I have, let's just risk, this high of 668 or 670, right? Let's just risk the previous day's high with the last piece, see if it fails, see if we actually pull back, and so forth. So as you can see, we didn't. That's why you see me cover here. I then start kind of getting a little bit flustered, revenge trading, short a little bit more, cover some more, short of these bounces, cover a little bit. And I was down a few grand by the morning, which isn't a big deal. That's fine. Like, again, that's the risk I take with shorting right out the open, trying to be aggressive if it goes red. It didn't. It is what it is. These 2 trades here, I could have not done it, but it didn't really add too much damage to the initial trade, so not a big deal. Then, as you can see here, we actually start fading. We actually start breaking below these previous lows, breaking VWAP. So I did decide to get short, and it actually did panic. I was like, all right, great. Now, we did turn here, so I did cover a little bit. But in many cases, I assumed, and many previous stocks who have this kind of a pattern, like a midday breakdown, usually they bounce and then have a good chance of actually fading, like really going red later in the day. So that's why you see me adding back here in this bounce. thinking that, we're probably not going to get back over like 7, and we probably should fade back and have a reverse red day. So that's what I'm thinking, right? And we just keep holding up. We start breaking back over, kind of testing 7, and I'm like, you know what, screw it. Like, clearly we're not going to break down at this point. I cover. Then it fades. Then it fails. I'm like, oh, you got to be kidding me. So I get reshort again. It recovers again. I cover. I'm like, screw this. And so at this point, I'm like super flustered. I've given it way too many attempts already, and I see it fade again, and I'm like, there's just no way. Like, this is gonna, like, it's failed so many times now, especially after breaking over 7 and stuffing like all these people who covered right here. I'm just thinking like, this has got to break down, and it doesn't. I short and I immediately cover again. So just way too many attempts. The over excess of attempts I took is what really caused this day, or this loss on the stock today, to be bigger than I wanted. This was my biggest loss of the month, being 16 grand here. So I'm not necessarily upset that I lost that much, because I do think this was a setup that I'm okay accepting that much. I just think I didn't need to lose that much given how many attempts I took, right? I really could have avoided, 1 or 2 of these attempts in here. After I covered and this bounce failed and I covered here, I really shouldn't have retaken it here or here or here. So it's a different dynamic of the bigger loss that I deal with that I didn't think about necessarily, of how many attempts do I want to give it, you know? Because unfortunately I kind of got into this mode of where I just didn't care. It was like, I'm going to give it as many attempts as it takes. And sometimes, like, yeah, that could be beneficial because if it works the final last time, okay, great, it worked. But like, at some point, you got to tell yourself, Kyle, you can't take 10 attempts and have the 10th attempt work and then be like, yeah, I'm going to make money. Because if you take too many attempts, your win rate is going to be so low that you're going to have a massively bigger winner to cover all those losses. So, not necessarily entirely sure how I want to go forward with it. Um, but I just know, I gave this too many attempts, and I definitely revenge traded on some of these attempts. So I just need to be careful that, even if I had avoided these last 2, I think my loss would have been less than 10 grand. So it would have been easily saved me, 7 or 8 grand probably. Um, it's just something to think about going forward, just something to consider. I don't want to limit myself to like a certain number, like, oh, only 3 attempts or only 4 attempts, because sometimes they generally do warrant like a one more attempt, you know, especially if the price action is showing me what I want to see. I just think I just need to be aware if I'm revenge trading or not, because if I'm revenge trading, then it's not even attempting anymore. It's just me trying to either make my money back, or I'm flustered because of the loss and I'm trying to, you know, be right. It's not trading the stock any longer. It's just throwing money at it because I think I'm going to be right, or I want to be right, versus looking at what the actual price action was telling me. And what it was telling me is, yes, we're failing, yes, we're dipping, but we're just staying in this range. Clearly, if we were going to go red, we should have done it here. We should have done it shortly after, maybe 5 or 10, 15 minutes after. So the fact that we didn't, we were just going to consolidate this range the rest of the day. And that's what we did. So if only I could really acknowledge that sooner, and didn't revenge trade, that could have saved me quite a lot of money. But anyway, moving forward, the next day was then the red day. And that's usually what happens, right? If we don't go red by this particular move and we just kind of consolidate, especially if we consolidate, below previous day's highs, especially after this like key 7 level faked out and then close under 7, the next day is probably high odds of a red day. So I did go in, being just as aggressive as before. I wasn't going to let the previous loss like fluster me from sticking to the level of aggression I wanted to take on or to the level of idealness this play was, and how big of size I wanted to take it and the risk I was willing to take. So right out the open, we do actually go red this time. And so as you can see, I take a couple pieces here. I take more pieces here now that once we're actually red. Cover some here. Take a small reshort thinking it was going to go lower. It didn't. Short a little bit more. But unfortunately, I did not cover it nearly as much as I wanted to, solely for the reason that I mentioned when I first brought up HTZ, is that based on previous red days, the percentage pullback was bigger than it was on this particular day. So I covered a little bit just to lock some in, but didn't cover it enough because I really thought we were going to go lower. Hence why I shorted a small piece here, and it was very quick to short this bounce, even though it bounced back much higher. So just stay patient, stuck to the plan. Like, I was going to risk either red, green, or even back up to 7, because 7 was such a good risk level from the day before. And we faded, which is nice. And here, we probably really should have gone red, or not red. We should have gone lower to a new lower day. And I think we did by like 1 cent. But I just kind of got unfocused and didn't really think about covering again for the conviction I had of like this stock should go lower. So I didn't cover any. And when it bounced back here, I was like, okay, this is kind of getting lame. Let's look to downsize some on the next dip. So you see me here, that's why I cover here. We then cut dips some more. I cover a little bit more. And I'm thinking we should stay sideways here and eventually, new low a day, late day. Maybe it's like a late day fade action. We really should hold down near the lows and then really start to fade a new low day. So as we start perking up here, I'm like, I can't help but think from the day prior, like up here, where like if we're not going to break down by this point, uh, it doesn't seem very likely we're going to go any lower. So that's why I did cover it. Unfortunately, late day we actually did crack and close like right at the lows, not complete lows, but certainly the afternoon lows. Um, and the next day I did just reshort more. I did just reshort, right out the open. Unfortunately, there was a small gap down, so I missed that kind of profit potential. Covered into here. I think I added a little bit back here, and then covered back into the sideways action. Of course, the secondary day is finally when it made a new low a day later in the day, and I completely missed this. So a bit frustrating, a bit disappointing. Quite the difficult ticker to manage throughout this entire process, but I did make my money. I did make a bigger win than a loss from the previous day. I lost 16 grand the day before. I made about 20 or a little bit over 20 on this particular trade. So to make that back and have it not even go as low as I expected, um, I'll take it. It's great. It's solid. I can't complain about coming out green, even though screwing up, too many times on the lost day. And then again, I made a few grand, shorting this day again, even though I left even more money not taking part of this sell off midday. But again, came out green, so I can't complain. It's just a good lesson to kind of, again, like I said, watch how many attempts I'm going to give something, whether it's an actual legitimate reason to give it another attempt, or am I just revenge trading? So that'll be something really to note going forward. And then the last trade, which was the last big trade, which was the last day of the month, which really kind of just a great way to end it, was on AMC. AMC, I'm sure you all know it. AMC Theaters and Entertainment. I've certainly watched plenty of movies in AMC theaters. They've kind of joined the group of meme stocks with GME, with Express, with not Kodak, but a couple other ones that just kind of ran when Wall Street Bets really took these things insane. As you can see back in January, I mean, it went from 5 and gapped up to 20, which was just insane. Um, but throughout these months, it kind of just held up really well, like way better than normal. Like to put this in perspective, you know, AMC took a hard beating because of COVID, because COVID pretty much shut everything down. Like no one could just go into a movie theater to watch a movie anymore. Like everyone had to quarantine. And so, COVID kind of hit March of 2020, which is right here. So even prior to COVID, AMC was like, a $7, $8 stock. Yeah, it was higher earlier, but clearly they were in a downtrend. They were worth about $8 or $7. So throughout this whole period where AMC really wasn't even open to full capacity because COVID was still going on, um, we were still in $8 or $9 range, which is just kind of odd. But we just were holding. Like many of the people who bought this stock, that were part of Wall Street Bets, like just held. They just didn't care. They were holding. Um, and so going to the end of the month here, we just started getting really bought up and really overextended. And I know a lot of people probably bought it with the anticipation of, COVID actually finally ending and like AMC is going to reopen in full, like it's going to come back better than ever. But again, putting in perspective, like AMC is at all-time highs. You know, it just doesn't make much sense from a valuation standpoint. Again, most people don't care about valuation. Like this is momentum trading, and if you're trading momentum, caring about the valuation isn't really important, although I think you should know it. You should at least know how extreme we are on or off a general kind of perspective of the stock. But again, at the end of the day, price action matters, momentum matters. Um, but again, I also know we're just extremely overbought. We go from 12 to 36. Clearly, it was a top potential short for me, and being how ideal of a listed play, like again, HTZG and ETCG were both OTCs. But from a listed standpoint, the liquidity and the volume is much, much bigger, which gives, in some cases, much more opportunity. So I actually did take a loss the day prior. We were gapping down on this day. I was shorting it on this overextended gap down, ended up calling back green, so I did cover, lost some money there. But then late day when we went on this full parabolic, I did short this lower high and then immediately cover into this wash. Ended up actually making me green on the trade on the day, so that was really, really cool. And given that this is like the biggest pullback, these two were the biggest pullbacks we've seen the run up. So going into the next day, I was not assuming, but ready to anticipate and react that it might be a first red day, right? When you start seeing cracks like this of weakness, bigger than you've ever seen them before, it's kind of giving you a hint of like people want out, right? It's getting overbought. It's getting a little bit volatile. It's getting extreme. It's getting emotional. And so that's what I was looking for. Now, granted, we went higher the next day, but at the same time, we also pulled even harder, right? These pullbacks are getting much more extreme. So at some point, a pullback is going to come, and it's going to be too hard to recover from. And so that's what I initially intended and thought. So let me pull up my charts here for AMC. So again, out of the open, I was aggressive. This was the first open where we actually kind of full on went parabolic. If we go again, 10 days, right? First day, again, not really extended, small spike, pullback. Next day, consolidate a little bit, then a spike. Certainly next day, we actually gapped down and then a spike. This was, after being this extended, this was the first morning where we just full on just squeeze right out the open. And usually many people make the mistake of thinking that's like a sign of strength, which it is. Obviously, it's going very strong higher, but it's not the healthiest, right? If you see a stock go extremely parabolic out the open, it's going to take a lot for that stock to hold those levels the rest of the day. And so that's why I was shorting, right? That's why I got a little bit of starters on here, anticipating that a pullback was going to come. And so when it did, I didn't really cover because again, I was being very aggressive. I originally thought that this big of a pullback was going to lead to the backside, and then we bounce. And so in this area, I start kind of covering. I start second guessing myself. Well, unfortunately, I short a little more when we fail. When we start kind of pulling back here, I start shorting more. But then we kind of come back, and you see this little wick. This wick wasn't a misprint. We actually did squeeze over this like 34.50, 35 level, and that's why you see me cover, this little candle right here, because I'm just like, oh my gosh, they're actually holding it, like they're gonna keep it going, and so I cover. Now you see how big of the selling volume this was. This is no joke. Like this wasn't a misprint. It literally almost touched 36, and then within 30 seconds later, in the same minute, I mean, someone just dumped. Someone just let all their shares go, stuffed everybody who bought. Pretty much faked out every short who covered, every long who bought. Everyone now is immediately underwater who's trying to long it, or anyone who just took a loss short now has to get short at a lower average. And so when I saw that, I was like, wow, they really just got me. Like they really just tricked me into covering, even though not tricked me. Like 10 times out of 10, I probably would have covered here because who knows if this would have just kept squeezing. And the last thing I want to do is be stubborn and just hold. So I don't mind that cover. But when it just faked everybody out like that, I was like, whoa, like that's a huge sign. And so that's why you see me immediately start reshorting, like all up in here, because I'm like, yeah, like anyone who bought, like forget the fact that I got faked out as a short. Think about everyone who just bought. Um, that's just a recipe for getting bagged on, immediately being down in your position if you looked along there. And so, and not only that, but having 8 million shares go through, being one of the biggest candles of the morning, it just was a huge sign that the backside's probably here. So that's why you saw me do get short. We actually then pull back. I do start covering here, re-adding those covers, or not all the covers, but most of them back here. One last add when we start to fail, and as you see it, we just keep going lower and lower and lower. We go red in the day. Now, why did I finally officially cover here? It takes a lot of practice, but it was me reading the tape, reading the buyers and sellers. I was expecting this entire morning to have some kind of a halt down because we were so extended. I was kind of thinking, we had seen this back in like January with AMC and GME that once kind of like shit hit the fan and we were backside, these kind of started panicking and panicking so hard that we halted down. I was looking for that with AMC, but we didn't get it. So because we didn't get it, I was willing to be a little bit more patient and thinking that we were going to have a more of a slower sell off than a full on panic. So my kind of plan was just to keep covering into pieces as we went lower. So that's why you see me covering, a little bit here. You see me covering right before we go, right when we hold red green. You see me cover some right when we go red here. But I did get all out here because at some point, every low a day kept getting like weaker and weaker. right? Yes, we kept making new lows, but at some point you can only make so many new lows before sellers kind of start to exhaust themselves, or sellers start to get they start to lose control. And so the fact that we're now sold off from 36 below 26, like 10 whole dollars a share. Every new low day seemed weaker, and then in the tape, in the level two, this 25 level kept kind of supporting. And before you know it, I saw like a few 100K bids pop up, which again, according or in relation to the volume, it's not that big. Like we're trading millions of shares a minute, but when you start to see bigger bids like that after so many times it's been propping and holding over 25, a round number like that, at some point I was like, okay, this probably is due for a bounce. And did I know it was going to actually be the low near the low of the day? No. But at this point, locking in as much as I've locked in, having it sell off as much as it's sold off, I'm like, okay, you know what? Like, let's not be greedy. Let's cover it all right here. So we did that. Locked in, really solid gain. Unfortunately, I did think we were going to bounce higher. I actually did take a loss, kind of longing it in here, thinking we were going to hold green and actually maybe bounce back to view up like it did here and here. But we didn't really do that. Right? Again, you can see pretty much the bounce was weak the entire time. So that's why you do see me reshorting here, thinking we're going to go lower. I reshorted here, thinking we're going to go lower, and we kind of did. But I did end up covering both these for a loss, so giving back maybe I think 5 to 10% of my profit. But even after that, even after these two small losses, this main win here, resulted in like 54,000. And again, I lost money on the. Let's go back. I lost money on the trying to long as well, so gave back about like 8 or 9 grand. But again, in terms of how much I made, coming out at 51,000, like it's just insane. Just by far my biggest listed gain. I think my second biggest gain of my trading career. And then close out the week around the same, a little bit above, but clearly this was the main contributor to this week. And then to close out the month at 159. Win rate is great at 70%. Average gain about double the average loss, even with this bigger loss from HTZGQ. Percentages are good. Cent gain is good. Really couldn't have been happier with my level of efficiency. Like I said, I took I think like 40 something trades in April. I took like one more trade than April and May, and to come out with 2.5 times more profit, specifically to sizing up and taking advantage of ETCG HTZGQ and AMC. Super super happy about it. Like that's kind of how I would prefer to trade. Of course, I enjoy taking the small singles in between that time because that really gives me a cushion throughout my month. I'm not going to knock on those smaller trades because again, even though those three main trades made 78% of my month, well, 22% still came from the smaller trades. Like if you're a business, like would you like to take 22% more profit from doing a little extra steps? Like, yeah, of course. But again, from efficiency standpoint, from really moving the needle forward of your account, like really learning when those ideal setups for you pop up and really like accepting bigger risk and pushing bigger size still safely, right? Again, any one of these trades I wasn't putting myself in a situation to take a loss that was going to devastate my account. Like it was still a safe percentage of my account. But just knowing when to push it. And I think that's so crucial. And I think that's something that comes along with time. If you're a newer trader within your first year, or even your first 2 years, I wouldn't sweat it if you don't know how to push it or how to really push on a particular setup. Because I mean, actually at the end of June will be my 5th year anniversary, like actually starting to trade. And I wouldn't say I really got a grasp of pushing size on the best setups until like late year 3. Year 4 and year 5 was obviously 2020 and 2021, which is, if you've been following me for a long time, you've known this is when I really started to take the stride. This is when I really started to make life-changing, you know, not generational, but like decade-long wealth that really just changed the trajectory of my life. And that came in right again, year 4, year 5. So, and it wasn't because and only it was because I really learned what my ideal setup was and having conviction on those ideal setups in kind of year 3. Again, that's my personal journey. It might be different for everybody, but if you're newer, your focus should be finding consistency. It shouldn't be trying to like size up and push it because you don't even know how to push it yet. You don't even know how to be consistently profitable for 3, 6 months, a year. Like let's get that in place first before you start to try to do something you're not maybe prepared for or you don't even know how to do yet, and you end up ruining the progress you've made prior, right? Don't try to jump too many steps. That's kind of my, I guess, little mini coaching session there, because that's how I did it, and that's how it's worked for me. Again, everyone's different, but not just for me, but for other trends I've seen in other traders who are profitable, similar people who've grown up in my same time frame, like Jack, Matt, Huddy, so many other great traders out there. They very similar kind of route they took. So it's not just my route; it's kind of like a way that it works for a lot of people. A lot of people have found success. So that's pretty much it going into June. Just again, as always, I'm like every other month. I'm just gonna take it by day. We could be getting offered a lot of great opportunities again. We could be offered nothing. Again, summer trading is a thing. It certainly felt for like this week, certainly like these couple of days in the middle of the month here, even on the 21st as well, felt like really, really slow. And that's why you see me. I didn't even take a trade on the 20th. I pretty much took the 20th off. Um, so it could be like that, or it could not be like that. It's all about reacting. It's all about just showing up and learning what you're given. Again, I'm going to work on like confining those bigger losses. Again, like I said, I was okay taking that big of a loss in HTZ, but watching how many attempts I take, I think is going to be crucial. So that's something I'm going to work on. But besides that, again, just reacting. Take what the market gives you. If it doesn't give you anything, so what? That's trading. If it gives you a lot, take advantage, and make some money. So hope you guys like this video. Be sure to like and subscribe, comment if you guys want to see anything in the future, any things that stood out. Always open to feedback. So I will catch you guys next time. Thanks for watching.